Hi friends, good day. Today, let us try to understand about direct taxes. What are its types? What are the advantages and disadvantages of direct taxes? What is indirect tax? What are the advantages and disadvantages of indirect tax through this video? According to Chris Rock, you don't pay taxes, they take taxes. Before we go in,
please subscribe for more videos. Click the bell icon for updates.
What are direct taxes and indirect taxes? Direct taxes. Direct taxes are one type of a tax that is levied directly on an individual taxpayer or an organization who pays it to the government and cannot pass it on to someone else. Direct taxation is levied on income, wealth, and profit. Such direct taxes are calculated based on the ability of the taxpayer to pay, which means that the higher the income or their capability to pay, the higher are their taxes. Now let's look into the types of direct taxes. Income tax. It is based on one's income. A certain percentage is taken from an employee or worker's salary depending on how much he or she earns. In this, an individual falls under different tax brackets based on their income or revenue. The government is keen on listing certain credits and deductions that help to lower one's tax liability. They can also file for tax returns every year where they will either need to pay the tax or be eligible for tax refund. Transfer tax. The most common form of transfer tax is the estate tax or inheritance tax. It is raised on an estate or the total value of money and property that an individual has left behind after their death. A gift tax is also another form of transfer tax wherein certain amount is collected from people who are transferring properties to another individual. Property tax. Property tax is charged on properties such as land and buildings. Capital gains tax. The tax is charged when an individual sells assets such as stocks, real estate, or a business. The tax is calculated by determining the difference between the acquisition amount and the selling amount. Advantages of direct taxes. It promotes equality. Since they are paid depending on the amount an individual earns or how much they make, it promotes equality among payers and citizens. It promotes social and economic balance. It curbs inflation. The government often increases the tax rate when there is a monetary inflation, which in turn reduces the demand for goods and services, and as a result of decreasing demand, the inflation is bound to decrease. Promotes certainty. The advantage of direct taxes is that they are determined and made final before they are paid as long as the income or the salary does not change. The annual tax is also the same every year. Economical. The government does not have to spend on collecting the taxes. They are mostly collected at the source. Some companies use automatic payroll deduction systems which help save time and money. Now let's look into the disadvantages. Evadable. The payer can submit a false return of income and thus evade the tax. This is why a direct tax is a tax on honesty. There is a lot of evasion. Disincentive. If the taxes are too heavy, they discourage savings and investment. In that case, the country will suffer economically. A high level of taxation discourages investment and enterprise in the country. It inflicts a lot of damage on business and industry. Creates social conflict. Since not everybody has to pay direct taxes, it is often responsible for creating social conflict amongst societies. It also leads to crime, social injustice, and a sense of inferiority among different groups of people. Indirect tax. These taxes are not levied directly on the income, profit, or revenue of an individual, but rather on the expenses that they incur. It can be shifted from one taxpayer to another. Indirect taxes are actually levied on the sellers of commodities and services, but they pass it on to the consumers and hence they end up indirectly paying such tax. GST, or the Goods and Services Tax, is a good example of indirect tax. GST is applicable to anyone selling goods or commodities, and they usually do not pay this from their pockets, but rather add it to the cost of the commodity and charge it to the consumer themselves. Advantages of indirect taxes. Everyone can contribute. Unlike income tax, which has to be paid by the individuals in certain income brackets and not others, indirect tax have to be paid by each and every one who purchased the commodity. They are convenient. Indirect taxes are convenient compared to the direct taxes. Firstly, taxes are very low and the consumers do not feel burdened when paying such small amounts. Secondly, they are hidden in the price and the consumer only sees the price and do not feel the burden of paying the tax. They cannot be evaded. Indirect taxes cannot be evaded as they are part of the price of the commodity, so anyone buying the good or commodity should pay the tax. They are spread over a wide range. Indirect taxes are beneficial because they are spread out over a wide range of products in small amounts. Now let's look into the disadvantages of indirect taxes. They can be regressive. Since the indirect tax is levied equally on everyone for both rich and poor, it can be deemed unfair to the poor. As the rich can afford to pay, the poor are burdened by the same. Thus, indirect taxes may be seen as regressive. They raise the price of the commodities. Sellers cannot always calculate and collect the exact fraction of the tax applicable on all the commodities they sell, and hence they charge more so as to be sure that every buyer paid the indirect taxes. But this increases the price of commodities. Now let's look into the difference between direct tax and indirect tax. Meaning, direct tax. If a tax is levied on the income or wealth of a person, is paid by that person or his office directly to the government, it is called direct tax. Indirect tax. If a tax is levied on the goods or services of a person and is collected from the buyers by another person, that is, a seller, and paid by him to the government, it is called indirect tax. Incidence and impact. Direct tax falls on the same person, imposed on the income of a person and is paid by the same person, whereas indirect tax falls on different persons, imposed on the sellers, but collected from the consumers and paid by the sellers. Burden. Direct taxes, more income attracts more income tax. Tax burden is progressive on people. Indirect taxes, rate of tax is flat on all individuals. Therefore, more income individuals pay less and lesser portion of their income as tax. Tax burden is regressive. Evasion. Tax evasion is possible in direct tax, whereas in indirect tax, tax evasion is more difficult. Inflation. Direct tax helps in reducing the inflation, whereas indirect tax contributes to inflation. Shiftability. Direct tax cannot be shifted to others. Indirect tax can be shifted to others. Examples: direct tax, income tax, wealth tax, capital gains tax, securities transaction tax, perquisites tax. Indirect tax, GST, excise duty. Both direct and indirect taxes are important for the betterment and growth of the economy. Thank you so much for watching. Please like this video and do share.